let's talk about the first stock that was brought up. And this company is actually really at the forefront of revolutionizing the healthcare delivery model with their drive for telemedicine. And that company is a company called Teladoc Health. That's ticker symbol TDOC. The stock is up about 67% this year versus, of course, the S&P up only about 2% on the year. At one point, Todd, this stock was up almost 150%, but it's had some turbulence over the past month and a half or so, which we'll dive into. But right now, the company is trading about $58 a share, down from $86 a share. Todd, it sounds like this might actually be a good buying opportunity for a company that is really on the leading edge.
All right, full disclosure here. I wrote an article for The Fool about, 2 weeks ago where I said 3 growth stocks that I want to buy the next time we get a sell-off. And one of those was Teladoc. And sure enough, we got a sell-off. And I'm beyond our, we have restrictions. I am beyond, so I can't talk about it. But I did indeed go out and buy Teladoc on that recent weakness. It's a small position. And I always say on the show, you've got to diversify. It's only a 2% position for me. But I did feel that the opportunity long-term here warrants it being in my growth portfolio. So I went out and I took a little bit on that weakness. It is a fast-growing company. It's about a $4 billion market cap company. And in the third quarter, its sales grew about 62% year over year to $111 million.
Fascinating, the growth story here. And two, I think when you look at how the company has been growing, they've really been doing it through smart acquisitions, which I think is a very smart strategy for them. If you look at their revenue over the past 5 years, it's been growing at a compound annual growth rate of 75%. Granted, the company is still not profitable. I think they'll get there over time. But this is a company who is really, I think, defining what telemedicine, telehealth will look like. And they've got a model. They use a subscription-based model that is certainly helping them to get over that finish line into profitability.
You highlighted the growth, and there's a couple different numbers I want to hammer home for our listeners here, okay? In 2016, Teladoc did about 952,000 telehealth visits, so a little less than 1 million, right? In 2017, they did almost 1.5 million telehealth visits, right? If you look at last quarter, they did 641,000 visits. So if you analyze that out, that gets you a run rate of around 2.4 million visits, right? And now think about that statistic I shared with you earlier today about the total number of primary care and outpatient hospital visits per year. Over 1 billion. So, I mean, am I worried that this company is losing money right now? Obviously, you have to watch and see how that progresses. But no, I am totally fine with them going out and investing back into their business as a growth investor, investing back out into their business with the assumption that there is still a tremendously long runway for this company.
Absolutely. And talking about, the revenue growth, so that 62% that you mentioned does include growth from its recent acquisition of Best Doctors as well. But even on the organic front, organically revenue grew 29% in the third quarter. Another thing that I think really stands out for me with Teladoc is the fact that they've got a global footprint now. And so they've got operations in North America, South America, Europe, Asia, Australia, and more than 12,000 clients in over 125 countries. It's astounding to me how quickly they've been growing. I know this stock in particular has been a favorite among many fools here. I believe even David Gardner is very bullish about this stock as well.
Well, it's of the 3 biggest players in telemedicine. It's the only pure play that we as investors can buy right now. So I think that's one of the other reasons that, it catches a lot of attention of investors. You mentioned the global growth opportunity. Shouldn't forget, they just went out this past summer. They bought Advanced Medical for $352 million. That gives them another $63 million in recurring revenues. And Advanced Medical is a global, outside the U.S., most of their business comes outside the U.S. company. So this isn't even a limited opportunity, an opportunity that's limited to simply the U.S. market. And then, just going back to and looking at that broader market opportunity again, by Teladoc's calculation, they think that roughly 417 million of the over 1 billion visits per year could be handled through telehealth. 417 million. So again, from my perspective, pretty much just scratching the surface. They did update their guidance when they put out their most recent quarterly numbers that reflects this recent acquisition. They're now expecting between 414 million and 416 million in revenue for the full year, and they're going to lose between $1.48 and $1.50 per share.
Yeah, another growth opportunity that I'll point out is the fact that Medicare's Advantage plan could actually now include telehealth visits as a part of their coverage for their 2020 plan year. This is a huge opportunity for the industry itself, but specifically for teledoctors with their size and scale. But that would mean they could offer their full suite of services to all 21 million Medicare Advantage enrollees. Huge opportunity and really a great way to increase their U.S. paid membership base. We mentioned at the beginning that there was a sell-off. Of course, the markets have been quite volatile over the past month and a half, 2 months. But Teladoc in particular fell about 12%. I believe it was early November for a couple of different reasons. One was investors reading through because of insider selling, basically. We had the COO, CFO had a personal sale about $700,000 worth of stock. I think investors just got scared by this, especially with it being so close to earnings. They thought there was a read-through to earnings. But if you actually dig a little bit deeper, these were actually shares that he had already planned to sell, and he'd actually planned to do this 5 months prior. So really a non-event there. And then, of course, as is the case with most growth stocks, there's always the short seller on the prowl. And actually, we've got a great article that if our listeners want to check it out, Keith, one of our writers, I believe on November the 5th, wrote an article entitled Why Teladoc Health Tanked Today. He really went through and piece by piece kind of deconstructed that entire thesis and really why Teladoc is still a strong performer.
Yeah, I mean, the short sellers were calling to question some of the marketing that they do through affiliates. And, I don't know. I think that, yes, you're going to always have kind of these moments in time where people will take shots at them. I think that you ignore that as an investor. You stay focused on the long haul opportunity. And that's one of the reasons that I was willing to step in and pick some up from my own portfolio. I think that one of the things I just want to go back to is the Medicare thing is pretty huge, because to put that 21 million people in perspective, right now, the way the company makes its money is, again, it's selling subscriptions to payers like employers and insurance companies to cover a certain number of people per month. And they cover about 23 million people right now. So, yeah, that represents a really, really significant potential to boost its addressable market.
Yeah. So all around, certainly a great stock, and now could be one of the best times to get in or add to a current position.